First way, trading. As the word trading means buying or selling goods, then trading in stocks is the same. In the stock market, trading means buying stocks at a lower price and selling them at a higher price in a short period frequently. To trade effectively, you need to understand something called technical analysis. But what is technical analysis? I believe you have seen stock graphs many times, right? This is called a candlestick chart, and each candlestick represents the price movement of a stock. Basically, when the candle is green, it means the stock price is going up because more people are buying the stock than selling it. When the candle is red, the stock price is going down because more people are selling the stock than buying it. Candlestick charts are actually more complex than that, but in this video, I will keep it simple. Traders analyze these graphs to predict when and where the stock will fall and when and where it will rise again. Technical analysis involves studying past price movements and patterns to forecast future price behavior based on the belief that historical patterns tend to repeat themselves. Let's get into an example. Let's say you want to buy a stock, and you see this graph. The golden rule of trading is to buy at a low price and sell at a higher price to make money. Using your technical analysis, you predict that at a certain point, the stock will stop falling and start rising again. Most traders wait until the graph shows signs of growth before buying. For instance, you buy one share at $10, then you wait for the stock to grow, and let's say it reaches $13. You analyze the graph again and see signs that the stock will fall, so you sell your share for $13. Congratulations, you just made a $3 profit.